If you haven't already, please subscribe to our channel, and if you like the video at the end, click on the thumbs up.
Hello everyone, and welcome to Crypto Night, the crypto investor channel. I'm Boris, so let's dive in. Today I'm with Colton. How you doing, Colton?
I'm doing great, Boris. How are you?
Good. So today we're going to be talking a little bit about the market, where things might be heading, what's going on. We saw yesterday that the stock market tanked another 2.5%. Looks like it's going to tank another 2% today. Went all the way down to almost 5% down. Then it came back up, to be positive. Now it's tanking again. It's just indecision at this point. Everybody's waiting for the Fed. So pretty much there are two most likely scenarios. Either the Fed continues on and marches ahead with hiking the interest rates 3, 4, 5 times this year, and getting rid of the tempering that they were doing, with buying bonds and etc. And as the stock market showed, which took, of course, that's the only reason why pretty much all the cryptos went down, is because the stock market has been taking a beating for the past month, pretty much. Ever since everybody heard that the Fed was going to start hiking the rates and was going to stop, printing money. Basically, the markets have reacted very negatively on this. And the problem is, on one side, they're going to be able to stop the inflation somewhat, but on the other, if they wreck the stock market, they're going to damage the economy, and then it's going to be layoffs, and it's going to be the world in trouble. So what it looks to me that, there are two possibilities. Either they're going to keep on going that way, and then they're going to probably damage the economy pretty badly, or most likely, because they've already seen what's going on in the stock market, they're probably going to say like, okay, we're going to raise the rates. We're going to slow down and stop the tapering, but we're not going to raise the rates as high. Or this year, instead of 5 or 4 raises, we're only going to do 1 or 2, to make it a little easier than what they first announced, which most likely will ease off, a little bit Wall Street. It will make it, recover, which of course will recover the cryptos automatically. I mean, cryptos have been trying to decouple from the stock market, but right now they're still not decoupled. So it's going to be some time before that happens. So to me, that's pretty much the two most likely scenarios. Either the Fed keeps on going, and then the market is going to turn to crap, and then pain is on the way, meaning we could see 30,000, even 25,000, maybe, who knows, even $20,000 Bitcoin, I mean, anything is possible, especially when the problem is people get crazy. They panic so much, they sell so much that the price drops like a brick. After that, remember, Bitcoin and all cryptocurrency is one of the assets that recovers the fastest. In 2020, in March 2020, when the whole thing crashed, and basically almost overnight, Bitcoin went down from $9,000 down to $3,000. In a matter of one day, was almost back at 5. And then, as we know, by the end of that year, by the end of 2020, we had reached like $14,000. So the thing is, those crashes, they're not necessarily bad. Sometimes they help go higher. The situation we're in right now, 36,000. Yes, it's not the greatest, but at the same time, it's good we liquidated the longs. There were too many people on leverage again. I don't know why people keep on doing leverage positions, where they know they're going to get wrecked if anything goes wrong. Yesterday we saw the reverse. We saw actually a short squeeze, too many shorts yesterday, people shorting the market. And of course, prices start going back up. Boom, they got liquidated, those shorts. So that's why suddenly it shoot up to 37,000 in no time. So the advice is simple. We don't know where we're going. You have two choices. Either you hodl, you keep what you have and you just wait. Or if you have some money available, you DCA, dollar cost average. You buy a little bit today, a little bit tomorrow, or a little bit, the day after. And every day you do a little bit. And one of the easiest way to DCA, by the way, that's very important, because most people don't know how to DCA. They think like, okay, I got $10,000. What do? I DCA over the next week. But that's not really DCAing if it's just over 1 week. What's important is to know how much money you have right now that you want to invest. Money that, of course, you don't need for anything important. Not money for down payment for house. Not money for food, or not money for car payments or whatever. That's not money you want to play with on the crypto market. It's money that you don't need in the immediate future, and money that if you were to lose it, it would not hurt you in such a way that you would lose your house, or you would lose your car, or your kids would not go to college. So it's just money that is that you can use to invest. But if you lose the investment, it's not going to hurt you. Now, of course, the point is never to lose the investment, but you don't want to put yourself in that predicament where some people think like, oh, Bitcoin is going to go through the roof. Let me sell the house, or let me mortgage the house to the max, and then I'll put it all on Bitcoin. And if Bitcoin goes down, then these people are in a world of trouble. But the DCA, so if you have, let's say, $10,000, when are you going to get another $10,000 that you can invest? If the answer is a year from now, then you need to DCA that $10,000 over a year. So that's roughly $833 a month that you're going to DCA, maybe a few times a month, maybe once, 2, 3 times a month, maybe twice a month might be easy, like paydays or whatever. If you're getting another $10,000, I say 10,000, it could be 1,000, could be 100,000. It really depends on everybody's, financial situation. But let's say 10,000 in our example. If you have $10,000 that, you're going to get in 3 months, then in that case, you can take that $10,000 and DCA it over 3 months, because you're going to get another $10,000 to invest. So that money that's coming in, it could be, bonuses that you're getting. It could be, your regular paycheck. Every paycheck, you're like, okay, I'll put 5%, 10% of my paycheck on cryptos, So this is a great way to DCA. And at least the DCA, there's virtually no risks. Because if you buy today and you buy tomorrow, and tomorrow the news is very negative, and the market crashes. Okay, you've only invested 2 days, but then the following day you'll be buying much cheaper, and then much cheaper, etc. And then if the market goes up, the same, you're like, well, it doesn't matter. I'm buying. It's creating just an average price throughout the year. And that's what matters. And if you look at Bitcoin over, and it's not just Bitcoin, it's true with most big cryptocurrencies. If you look at them over the past 5 years, I mean, they've gone up and up and up and up. So trust me, you wish you could have bought and DCA, Bitcoin 5 years ago. So that's it. So we'll see where the market goes. Personally, I'm more leaning towards the Fed easing a little bit, and Wall Street, cheering that news for, having maybe a better outlook for the year. Now, let's be frank. There's a lot of positive news in crypto, so everything should be doing fairly well. But there's going to be a lot of turbulence. There's going to be a lot of volatility throughout this year. So be ready, don't think that, oh yeah, if we're back at 50,000, that suddenly it's good. We're on our way to 100,000, because we could drop back to 40, then go up to 60, then drop back to 45. I mean, it's going to be a little bit all over the place. But as an investor, you don't really care, because what you care about is long-term, 3 years down the line, 5 years down the line. So those small variations, it's a little bit like looking at a graphic on, on crypto and looking that within the same day, Bitcoin has gone up to 36, back to 33, back up to 37. You're like, it's over an hour. I'm not going to trade over an hour. I don't care about those price variations. All I care about is what is the price at the end of the day. Well, have the same mentality. What is the price 3 years from now, 5 years from now? That's what really matters when you buy today. The fact that we buy DCA is so that we get an average price and we don't miss out on prices going down. Any questions, Colton?
From my side, I wanted to end it on a positive note, and you ended it on a positive note. Our next video will be about a coin that is actually doing pretty good in the market, so be on the lookout for that video too. So there is some positivity ending this video.
Yeah, don't let the FUD get to you. Over a long time, you'll be glad you get into crypto. Thank you, Colton. Thank you, everyone. We'll catch you on the next episode of Crypto Night. Bye-bye. I hope this video helps. Thank you for watching. Have a good day.
If you haven't already, please subscribe to our channel. And if you like the video at the end, click on the thumbs up.